Hello everyone. I'm Tanya and today we have with us Mr. Ankit Mehra, co-founder and CEO of Gyandhan. He is an alumni of IIT Kanpur and holds an MBA degree from IESE Business School, University of Nawara. He co-founded Gyandhan in 2015, which is an education financing marketplace and aims to provide financial assistance to thousands of talented students either through loans or scholarships. We're very excited to have you on board, sir. Without further ado, I would like to introduce my colleague Tanvi, who would be taking your interview today. Uh, I'll take my leave and leave Tanvi with you to carry on with the interview. Thank you.
Sure. Thank you, Tanya.
Thanks. Right.
Sir, it's our pleasure to have you on the board. Can we start with the meeting? With the interview?
Sure.
Yeah.
Sure.
Yeah. So my first question to you is that how did you come up with the idea of Gyandhan? Like, we would like to know.
Sure. So the idea for Gyandhan really came about when I was pursuing my B School studies at ESA Business School in Barcelona. So the genesis really came when I saw a lot of my colleagues were facing troubles getting education loans for admission into the B School. So the way it works is I got an admission into ESA Business School in 2013, and typically all the top business schools have tie-ups with local banks, and students used to take loans from local banks to pursue their MBAs. But this was a time when Europe was still reeling under the effects of the global recession, and what ended up happening was the local bank went back on their arrangement with the school, and students were finding it tough to get loans. And that's really where my prior experience at Capital One kind of came into play, and I started looking at my colleagues and I said that, hey, there are quite a few of these students who can get really good jobs, and why aren't Indian lenders looking at their future employability, their future income potential, and kind of giving them loans? So that was really the genesis when I kind of started looking at it. And then during my stint at IESE Business School, I kind of worked with a startup in the Latin American markets that was focused on education segment itself. And then after a short stint with them, I decided to pursue Gyandhan soon after completing my MBA.
Okay. So what kind of difficulties you faced while the growth of the company?
So I think there have been multiple, obviously, as is kind of expected of any company, there will be multiple phases of multiple challenges along the way. I think obviously one of the big challenges always ends up being hiring a team, hiring the right people to join the team. At the early stages for us as a company, the tough part really was convincing banks that education loan can actually be a low NPA segment. So for us, the idea really was what I was.
Sir, I'm sorry, but you're not audible properly.
Really trying to predict future. Okay, all right. Hello, is this better?
Yeah.
Okay, cool. So I was saying that typically there are multiple challenges along the way. I think the first key challenge we really faced was convincing the banks that education loan segment can actually be a profitable asset class itself. So we're coming from a backdrop where in India, education loans see large amount of NPAs. And we were really coming from a standpoint that, hey, you should actually look at future income potential and do loans on the basis of that. So I think that was really diametrically opposite to what banks were observing in their own portfolios. So really convincing banks to say, hey, let's take a stab at this. We can really dissect the population and find good segments was a big challenge. Obviously, after that, along the way, there have been multiple other challenges, whether it be around the team building part of it, whether it be around fundraising, whether it be around product market fit, and so on and so forth. But I think the initial set of challenge was really convincing the banks part of it.
Okay. So what was the gap in the market that you identified?
So really, and that gap still exists. I think a huge gap. So if you look at the market today, there are varying estimates around the total spend in the education space, but many estimates point to close to $40 billion is a private spend in the overall education segment in India. Now that could be domestic spend, that could be spend on studies abroad. So that's an annual spend versus the total education loan portfolio itself is just $10 billion portfolio. So what ends up happening is that there is a huge demand. I mean, the cost of education has been rising drastically, and it's not really it's outpacing the inflation costs. So there is a clear demand for loans, but there is the lenders have not really looked at that as an asset class. So I think that discrepancy, and I mean, if you compare it to other international countries, wherein typically 35% or 40% of the total cost of education ends up being financed. So that huge discrepancy is really what the gap was. And really, if I had to pinpoint it, it was really down to the inability to understand the customer needs and structure a right product for that particular customer. And even in cases wherein there was a product, frankly speaking, the experience was really bad. And so there was a customer experience issue as well. But more importantly, there was a product identification issue itself.
Okay. So it would be great if you explain your business model.
Cool. Our business model is relatively straightforward. We get most of our revenues in the form of a commission from the banks. We don't charge anything to the students for the services we render. We get paid by the banks a percentage of the loan amount as that they disperse as a success fees, and that aligns our interests relatively well with the banks as well. And the reason why they do it is really because we are helping them drive conversions at their end. Recently, we have received the RBI, the NBFC license from the Reserve Bank of India. So going forward, there will be a addition to our business model where we will start getting two more streams of income. One will be the net interest margin on the loans that we do in conjunction with our partners, and then we will also be providing risk mitigation services to our partners. So there we'll be getting some kind of a management fees.
Okay.
So those would be the three key stories.
Yeah. So did your family or friends help you with the funding or your startup, and did you approach any investors?
Sure. So we didn't really reach out to our family for funding related questions because I think we, both Jainesh and myself, come from reasonably middle class family backgrounds, and we felt that our parents had done sufficiently for us by providing us the right background and right education. And so we felt that it was up to us to kind of reach out to investors and find the right investors who could help us in this journey of ours. So we only used our own savings that we had accumulated during our careers as the initial investment in the company. And then we definitely did start reaching out to investors once we started our journey.
So how did you manage to reach the investors? Like any tip?
Sure. We essentially we spent. So I moved back in April of 2015, just after my MBA was over, and Jainesh actually took a break from his job at Capital One in the US for a month to come back and do on-the-ground study. So that first month, we really crisscrossed the country talking to potential customers, whether it be students, whether it be banks, and talking to a bunch of folks. And it's one of those sessions wherein there was a boot camp at ISB that we attended. It was a weekend hackathon, and that's where we met a bunch of folks. One of them was Satyen Kothari, who was one of the co-founders at CitrusPay, now at Cube, and he liked what we were planning to do, and then he really became a mentor of sorts who we could ping on and off whenever we had certain questions. So for us, really, it started off more as a mentorship thing with Satyen, and then when we really wanted to go out and start raising funds, it's then that we reached out to Satyen again, saying, hey, we now want to get out to the investors and we would want you to have you on our cap table. And Satyen was kind enough to kind of become our first investor, and he introduced us to Stanford Angels, and basically just became a connection thing that he was a part of Stanford Angels. He introduced us to Stanford Angels, and from there we got introductions to Harvard Angels. We got introductions to Praveen Gandhi of Seed Fund, and these are the group of folks who participated in our first round of investments. And subsequently, most of the couple of other add-on rounds that we've done have been through introductions through our investors itself.
Great. Which factors do you see impacting your business over coming years?
So I think there will be two aspects to it because we are what you would call edu fintech segment. So one would be the ed part of it, and one will be the fin part of it. When I talk about the education part of it, there will be two key differences that will pan out in the next few years. One will really be pretty much a redefinition of what education really is all about. Some of it is already playing out in terms of we might see some kind of rethink on what traditional degrees really are. Do you really have to go to a college for 4 years, or do you do modules? It becomes a modular education where you do certain modules, you do some work, then you take on certain other modules. So I think that will have a
Part-time
fundamental
education.
yes. So that will exactly. So part-time education or apprenticeship kind of a models, that will have a fundamental impact in terms of what the ticket size of loans will look like, and then what the tenure of loans could look like, how really risky the loans could even be. That'd be one thing. The other thing would be non-traditional financing models like your income sharing agreements could become mainstream, wherein we could see some universities participating in the loan programs itself or the financing programs itself. That will be a big fundamental change as well that could happen in the coming years. On the finance side of things, I think really it will be, if I had to summarize, it will probably boil down to open banking. Open banking could kind of even out the playing field quite drastically and kind of upset the incumbents drastically. So I think those are the 2 or 3 factors I think would play on the ed side of things and then on the fin side of things.
Okay. So are you planning to hire fresh talents into your team as your company is growing? And what qualities you are looking for hiring people?
So obviously, I think we are at a stage where we are kind of looking to add fresh talent to our team across the spectrum, both in terms of seniority as well as in terms of the segments. So at this point in time, we are looking to add talent to our team on the tech side of things, on the data science of things, even on the product management, and then finally now with the NBFC, even on the finance side of things. So those are the broad segments where we are looking to add talent. And again, as I said, we are looking to add people really at the senior leadership level as well, and then at the mid and junior levels as well. In terms of qualities that we look to hire, obviously it will differ by the position we are hiring for and the role we are hiring for. But at a minimum common thing that we try to look for is essentially basic analytical skills, and what I would call common sense. I think those are kind of attributes we definitely try to look for. And then there are a couple of other things that we definitely also want to gauge during our interview process. One would really be adaptability, because that is very, very critical in a startup. I think because there will be a lot of unstructured things. So how quick are you to adapting to things, and how comfortable are you in those fronts? That's important, as well as equally important is really ambition, because we are at our early stage in our journey, and so if we have ambitious people who are joining us, they can help us kind of scale new heights rather quickly. That would be the thing. And then the last thing I would mention really, which I think sometimes we tend to overlook, is really sheer genius. I personally think that sometimes we tend to underrate that aspect of it. I personally think that there are certain categories where sheer genius will kind of trump almost everything else.
Okay. So what according to you is a great personality of a good leader? Like, I can see you are a good leader. So according to you, what are the good traits of a leader?
Well, I think for me, on myself, as the judgment is still out there, it'll take quite a few years before we can make any call on that. But I think in my mind, how I visualize a good leader, and kind of when I look at my own career in terms of people I've idolized or come to idolize so far, I think for me there are 3 or 4 attributes I think are very, very important. One is authenticity. I think I personally value that a lot. So authenticity for me is very right up there. Followed quickly by self-awareness, in terms of how self-aware are you about your own shortcomings and kind of your strengths. The third thing would really be accountability in my mind, because that is very, very critical when you're leading a team and kind of taking ownership really of whatever might happen. And then the last thing, which is very, very important in my mind, is really the ability to delegate things, and more importantly, then to empower the individual who you are delegating things to get things done. I mean, it should not really be just delegating to get some managerial stuff off your chest, but really you're empowering your team so that you're kind of creating a new breed of leaders out there. So I think in my mind, it will be really authenticity, it will be accountability, it will be self-awareness, and then the ability to delegate and empower.
So what is the worst part and the good part of being a CEO of a company?
So we are a relatively smaller startup. So I think for us, for me right now as a CEO, there are a bunch of things I would do that probably you would not have. You'd have different roles at a relatively larger company. But so personally speaking, for me, the worst part of being a CEO right now is really having to deal with paperwork. I think it's really trying to do all the paperwork, whether it be around compliance, whether it be around regulations and stuff. While those are important, it just takes away time when you would want to do certain other things. Actually, you want to kind of either do experiments or you want to talk to different people across the team. So I think that for me is really the worst part of being a CEO. And the best part really is as one of the founder CEOs, I think it's really the kind of ability to work across different aspects of the business. And at the same time kind of being responsible for the overall big picture. I mean, it's really boils down to kind of, we had an idea, Janish and me had an idea back in 2015. We wanted to do certain things, and right now as a CEO, the best part is really trying to see how different pieces in the company would come together to make this vision a reality.
Okay. So my last question to you would be, describe a time you had to make a tough decision, like for example, budget, yeah, organizational restructuring. What was the tough time?
So I mean, I think everyone has had a pretty challenging 2020. Thank heavens we are in 2021. So yeah, I think for us in our journey, there have been many different places when we have faced challenges. But if I had to say, I mean, obviously, thus far the worst time has really been the pandemic, when we had to make job cuts. I think that was the worst part, really. Having said that, we got a bit lucky, to be honest, because as early as February of last year, we saw that we kind of thought that something was going to happen. And so we actually had plans at that point in time to hire quite a lot of folks, and we just paused hiring, saying, hey, let's wait for a month and then resume hiring. So that really saved us a lot from going through a lot of heartburn. But nevertheless, we did have to make some cuts during the pandemic. I think one of the things we were very clear on in discussions within the company, in the leadership team and with our investors, was really whatever we wanted to do, we wanted to do at one go. And we wanted to be clear with all the entire team in terms of what was happening. So really how we planned it out was the fact that we just had a graded pay cuts across the board, saying, hey, people above a certain pay scale will get X% cuts, versus people who are getting at a lower salary will either get no cuts or will get some minor cuts. That was a decision we made to minimize the impact on the job cuts that we had to do. But nevertheless, we had to kind of let go of 4 to 5 folks. But even those 4 to 5 cuts that we had to do, I mean, it hurt kind of telling them that, hey, I mean, you've been doing a decent job, but I mean, really, we don't see we don't know what's the timeline around how soon the things will come back, and we will have to kind of adjust accordingly. I think that was really not a pleasant time, but it was necessary, kind of in hindsight, was necessary for the team. And the fact that we kind of were able to get salary cuts as well meant that we didn't have that big an impact.
Okay. So are you looking for any vendors to help you simplify the part of your business?
So for us, I think anyone who looks at our website will know that will kind of make a comment around. It's not really a aesthetic website probably because it's more like we've designed it as an engineer first. We just figured out certain things and we kind of put those things together. So I think right now we are actually looking at vendors who can help us on that side of the journey, really making it a more aesthetic experience, or the design and the UX itself being more palatable, if I may say so.
So lastly, what are the recent and long-term career plans of Gyanthan?
So I think in the near term, when I say near term, I think it might be probably a 12-month out horizon. For the near term, the first thing obviously is, given the NBFC is in place, we are really looking at working with our existing partners to say how can we really fundamentally come up with new products that will meet the customer demands. So we've just launched one of the products is targeting top B schools, when students can get loans all the way up to 1.5 CR with very minimal collateral, which was not the case. I mean, previously you needed a 1.5 CR or more collateral to get a loan of 1.5 CR. We are actually launching the product when they don't need that much of a collateral to get that loan, which will be quite a new thing in India. So I think really it's coming up with new financial product in partnership with lending partners. Putting it in numbers, I mean, for us, the target really is 650 crores in loans in the next 12 months. The other thing really in the short term, which we are very excited about and enthused about, is the whole domestic segment that we started last year. And there really the focus for us is really how can we enable education for the relatively low income segment, which typically does not get the education loan product just on the basis of, hey, they cannot meet the obligations per se. So we've come up with a couple of structures where we are piloting them at this stage, and our early results have been fairly kind of, I would say, exciting and kind of fairly promising. And for us, the target really is to originate close to 50 crores in 12 months. And I think that will really help us a lot. I think for us, when we started off, I was talking to you about our journey around the ESA thing. For Jainesh, really, Jainesh prior to getting into Gyanthan, prior to getting into IIT, he was a product of Super 30. So he's always had that thought process of kind of how can we really do things at scale for the broader segment. And I think this entry last year for us really opens that window. And for us, that's something we are excited about in the short term. In the long term, and when I say long term, I'm right now just focusing on 5 years. For me, the real long term is more like 10 years and 20 years. But the 5-year horizon really for us, the idea would be how do we kind of onboard close to 1 million students, borrowers in the next 5 years? And really, how do we position ourselves as a financial partner to all these students who are just getting started on their journey into the corporate world and so on and so forth. And then the last thing would really be, since we started off, since the ideation phase of ours, the thought process was kind of doing loans on the basis of potential into the future or employability prospects. How can we make Gyanthan score really as the go-to score for education loans? I think so. 5 years out horizon, if we can make Gyanthan score as kind of the go-to score for education loans, if we can onboard 1 million student borrowers on our platform in as low risk as possible, and then kind of be a financial partner for all these million student borrowers as they get started on their journey, that will be something we'll be kind of looking for at Gyanthan.
Yes, sir. We also hope that whatever you have planned go accordingly. And thank you so much for your precious time. Thank you so much.
Thanks.
Yeah.